And neither do I. Here to tell us how you can get a jump start is Judy Brown. She is the SC&H Wealth Principal and Wealth Advisor joining us here on set. Great to have you here in studio with us.
Thank you. Thank you for having me.
Okay, so never too early to get started here, but if you are trying to get started early, where should you begin? Where should the mindset really kind of set a step one for your tax preparation for 2025?
Absolutely. So right now, I think it's just understanding what year-end tax planning is.
Okay.
And basically, tax planning is taking people's personal goals, financial goals, and integrating whatever the current tax laws are to find a tax-efficient way to achieve those goals. So I think first step is looking at what your financial goals are, and then taking a look at your tax returns more carefully. So right now, looking at, we're in September, so it's a great time to hone in on 2024 taxes before the year wraps up. Some things people could do would be to take their 2023 tax return and start to update it with preliminary numbers. We don't have final numbers, but maybe their income's a little higher this year. Maybe it's going to put them in a different tax bracket. Maybe they've had some medical expenses, so they're going to be itemizing, whereas maybe they didn't last year. So at this point, they can start to gather, take the time. It's not fun, but they can take the time to gather the documents, mortgage interest statements, all kinds of things, and just start to plug it in. And that's where the help of a tax professional or a tax advisor can really help. But it'll identify, have they paid enough in this year to avoid a tax penalty? Are they on track with their retirement goals and tax efficiency? So that's kind of the first step right now, I'd say.
I mean, is there any significant change in the filing process that we're anticipating between 2024 and 2025 at this juncture?
Interesting, not so much between 2024 and 2025, but between 2025 and 2026, we are expecting some big changes. And that's because the Tax Cut and Jobs Act, which was signed back in December of 2017, expires or sunsets, at least a lot of the provisions. And some of those provisions are pretty significant. And one that's been talked about a lot is the annual or the lifetime estate and gift exclusion, reducing to about half. But the one that's going to really affect most people, the things that are going to affect most people really is about the tax rate, the top tax rate going up, all the tax brackets shifting. Like the top tax rate is going to go from 37 to 39.6%. The standard deduction is going to go in half. So people that weren't itemizing, that were not itemizing before might be now. So that's when we're going to really see a lot of tax planning that will be very valuable.
Okay, so with that in mind, I mean, we're in the midst of convention seasons. The RNC, we've got through that, now the DNC, and we're hearing a lot more talk from both sides of the aisle about what potential changes could be put forward that have impacts to tax code and legislation that could come forward. Is there anything that voters, people who are filing for their taxes, should be paying close attention to and listening for?
I think they definitely should be paying close attention and trying to see how it's going to impact, again, their personal goals. And that's where if they can start now with doing tax projections, it's not a 1 year, it's a lifetime of understanding your tax efficiency. And so if they can start to do that, then they'll be prepared by maybe running it if the Tax Cut and Job Act sunsets versus if it doesn't. And then they can make decisions more easily and more quickly depending on what happens.
Absolutely. Judy Brown, she is the SC&H Wealth Principal and Wealth Advisor. Thanks so much for taking the time.
Thank you very much for having me.
Yeah, so there you go. There are some, a little bit of ideas, stuff you want, if you want to plan early on taxes, especially, if you making, if you go into a different tax brackets, if you're going up to the six-figure mark, remember there's like a different tax brackets of how much you make. For example, if you're a single person and make $0 to $11,000, it's $1,600. It's a 10% tax rate. If you are at $11,000 to a $47,000 tax, it's a 12% tax rate. And then here's a jump off of if you make $47,000 to six figures, so $100,000. There's a 22% tax rate right there, and so on, so on, so on. You know what, Hakeem, I'm impressed with your brother, man. What's his take about possibly playing in Texas early, become to Texas?
Yeah, well, if you have a
Can y'all
small
hear me?
business, can y'all hear me?
Yeah, 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 yeah.
Well, we got a small business, and plus we're independent contractors as nurses and other things and little things that we got our hands in, and plus we have investments and everything like that. There's a lot of misunderstanding. A lot of people are looking at stuff that don't apply to them yet, right? I'm not talking down. I'm saying it don't apply to them yet. In the middle of tax season, it's too late to be planning for taxes. Because one year we had to pay like almost 30,000. That lets you have an idea. During the pandemic, we worked and we traveled to go to work because there was nothing else to do but work because we are first responders. So we made a good bit, but there's most folks don't fall into that. You know what I'm saying? Most folks don't fall into that because I'm talking about our folks because they're not married, they're not filing together. Most people find weird and wonky ways to file. All that should be handled before the tax season, even before you get into that tax year. Figure out the planning should not be done in the middle of the tax season. It should be done prior to because you the way that you get ahead is by properly managing and having overhead, right? Overhead is what you're not spending on eating, entertainment, or saving. Saving is different than what you are investing, right? So all that has to be handled ahead of time. You say, how can you handle all that? Because you don't know exactly how much you might make. Things might change in the middle, but you have an idea of what you're spending just for the house to operate, right? So you need to specifically budget by that, and then you start dealing with percentages, right? So it don't matter what comes in. Now you have a certain amount of percentage of whatever comes in that you put into the side for investments. That's extremely important, and you have what you putting aside for savings, right? And savings is more for emergency money. There's a statement going around that says most people don't even have $400 in case of an emergency, right? That's for 22 to 23% of the population. The next group in the population, they need at least $4,000 because if your AC go out and it's out of warranty, you stuck in Florida. You done. You know what I'm saying? So there, the whole the whole pre-planning and future and putting your future in mind has to happen before that season. And I think people should not worry so much about this season, but the next year they should start plotting it out and planning it out by percentages. A penny saved is going to turn into more than a penny down the road. And that's what we really need to focus on. If you're focusing on what can I get back, there are things that are already in place, that are already set. You can't change. You can do some things, but you can't change them properly right now. But if you plan ahead for the next one, then you can make some movements and you will see a change. And you first you'll see a change in you and how you operate. Some things you'll back off, and then other things you'll move forward in. I think that's the best way forward for all of us. And last final thing, and I know I'm over time, is communalism. We have to work that out. And when I say that, I mean it in terms of family, right? All the time we talk about, oh, we're not together, but this Latin family, that such and such family, but they only do that within family. They don't do that within certain community. The community will become stronger when families start working together. A family, if black families start saying, you know what, it ain't gonna work out for us like this. Let's three families come together, buy a 4-bedroom house, and we make that work, and then we move out from that as we stack up our chips and get better. We'll buy another house and split it in half. The next one, split it in half. That's how they do it, and that's how we should do it. That's how we did do it.
To me, it's very smart, especially right now when you try to utilize the tax season, especially early in the game. It's very good because then you're able to, very like pretty much what he stated, you're able to prioritize and able to balance yourself out. The problem with certain people, they wait till at the end of the year to put all their books together, and now while they find themselves in a big financial hole, or figure out that hey, that extra money I could have used for something else to lower my tax burden. That's the problem. People don't understand the aspect of the tax burden. Yeah, you can make six figures and you can still be owing a lot of taxes. But if you understand how to use that six figure and make that money be used for you, you can actually put yourself in a lower tax burden and you can actually get money back. That's why a lot of people that have that's very wealthy, they try to use the tax season to try to find a way to get some money back and not to find a way to owe. It's a poor man mindset to owe. It's a rich man mindset to gain. That's the problem that you want to get. That's the part you want to get to. You want to get to a place that you want to be able to gain during the tax season. And I think the best way to do that is to utilize whatever you have right now to benefit you long term. See, someone like me that used to owe a lot of taxes, I realize how the rich people play the game, and I figure out like, hey, how come all the rich people can have fun? It's time for me to have fun too. I realize how they use the tax to their benefit. And I think us as regular folks, we need to have that same mindset. Okay, how can we use the tax as benefit? Okay, when I get my tax return, let me use that money. Let me put in some form of investment. Let me put in form of stocks, trade, whatever I can do so it can bounce back later on at the end of the year. That's what the rich people do. That's the rich game they play. So right now is the best time to prepare for next year tax season. And that's a fact. Shout out to Natasha Vincent, the mom mother is also in the building. Shout out to Jay Hub, who's also in the building. Shout out to Barry White. Happy, hey, great to see you, who's also in the building. Shout out to Ashley A, who's also in the building. Shout out to Kendall, the mom father, who also in the building as well. Go ahead, Jordan.
Yes, planning is early is very, very important, and I could definitely say like for my wife, when she has her dog business and everything. I remember like the first year it was okay, but the second and third year when she was making no more money, she would start when she kind of didn't plan ahead, she would start seeing that she owed taxes, $1,000, $2,000, and everything. So now that she's like, you know what, I'm gonna plan early, even though I have my business, also I'm working too. I'm gonna see how much I'm gonna owe for next year, just get a calculation and everything. And also too, people like rich people who own businesses and everything. This is the perfect time to say, hey, I put in, so much money in charities and everything. Let's see if I can get a tax write-off. Let me plan right now, see how much I can, put in the donations, all that type of thing, and see how much I can get a tax write-off so I don't owe any taxes as well. And that's how people, big people do with money and businesses and everything. So it's very, very important, especially with couples who has like I said, who has a business and everything, and really figure out, hey, how much we gonna, let's start right now, let's start early, let's see how much we might owe or we might not owe at all, because Ronnie's correct. If you start late, especially in January, you're already too late. You're gonna figure out, oh, I already owe and everything. You won't be preparing everything. So it's very, very important to everybody. You start right now. Plan early, especially if you have a business. Start right now and see if you're gonna owe or you may not owe, because by next year you'll be prepared, and it's like, okay, if I owe, okay, I'll have the money saved up to pay already, because you do not want to owe the IRS. You do not want to owe Uncle Sam. Believe me, Uncle Sam do not play with his money. That's my take on that.
I don't know how King got to take on it before we move forward.
No, he's good. He said he cool.
That being said, hip hop. Jordan, what's going on in the hip hop world? Shout out to Ashton, also in the building, the creator of the Psyche Avengers.